On your screen here is Tesla, and it's a really interesting stock at the moment. So let's just frame this quickly. This is what Tesla's done over the past week with all the other stocks in the market. It is up significantly to the tune of about 16%. Now, this morning was Monday, November 6th, and pre-market the stock was at 226. If we flip this to extended trading hours, you can see here we're up in the 226, 227 neighborhood. And then the stock just has absolutely gotten crushed. Well, what's so interesting about this is that when you look at our hero flow, what this is showing you is the real-time options flow. This is the purple line from every single trade that's taking place today. So if this line is going down, people are placing bets that the stock is going to go lower. They're selling calls or buying puts. And if the line is going up, they're betting that the stock is going to go higher, right? They're buying calls and they're selling puts. So what you'll see here is that, number one, the stock opens and it goes above our call wall at 225. You see there's a lot of bullish options flow to start the day. Our flow alert goes off. Our flow alert goes off when we see or we detect a significant amount of options volume, enough to drive the stock. That flow alert goes off, stock crushes. Second flow alert goes off on the bearish flow, stock rallies again. And then what you see is the third alert goes off, and you don't get the same mean reversion. You get small little mean reversion in here after some flow quiets down. But this has really persisted to be lower all day long, right? And you can look at the shape of this. Now, if we break this down and look, you can see it's not just put buying. People are selling tons of calls and they're buying tons of puts. In fact, if you look at this lower gauge here, this measures the width of the gauge is the high and low of our signal over the last 30 days. This is almost the most bearish order flow in Tesla over the last 30 days. And this is in a time where, if we zoom back a little bit, look at how far down the stock has been at many times over the last month. It hit, significant lows. So people really took the opportunity to rip into this stock as we bounced here higher, and they really took advantage of that. And I think it's a very bad signal if you're a Tesla long. In the short term, it's a very bad signal. So what are the levels that matter? Well, for that, we go to our put and call impact charts here, and there's two very clear levels that I want to highlight. The first one is going to be the 200 strike to the downside. I think this is where we would bottom out at. And the second one is the upside, the 200 strike. Now, why those two strikes? Why do I think they matter? Well, if you look at the history, despite how ugly the stock was over the last 10 days, this 200 put wall area generally held firm, right? There was a little dip to 195, but this 200 area is the area that held firm. The second thing is you can see that because this key gamma strike's at 200 and at 220, and the call gamma strike call wall here has been at 220, that to me tells me that that's a significant area of upside kind of resistance. And so, I'm looking at that into the next, basically call it 10 days as my range. But I'm favoring a visit to this 200 area into November expiration, which is on the 17th. Now, if we do happen to move sharply lower to this 200 area, right down in here into November options expiration, which is again on the 17th, then I think that could clear out some puts and provide a little bit of a year-end rally for the stock. But right now, this thing came under heavy pressure on the rally, and I think it's something that traders of longer time frames, right, want to pay attention to, because this was very heavy negative delta flow on the day. So if you have any questions about that, please put them in the comment section below, and we will talk to you soon.